Good morning, everyone. How are you doing today? Well, looks like the stock market's having another rough go of it. And based on the feedback I got yesterday from sharing my experience of losing six figures in the stock market, I thought I should do another video focused on 5 lessons I learned from past crashes. If you don't know my story, I spent 20 years ago being a day trader in the dot-com era. It was wildly successful until it wasn't. That experience taught me a lot. Most importantly, if you're an emotional investor, you should not invest in the stock market. But coming back, I have actually learned 5 things that I think are relevant. And if you're in the market, you're looking at your screen and you're kind of feeling fraught. I thought I would share my 5 lessons learned. Again, I paid for these dearly, and I hope they help, or at least help you ask yourself some internal questions. Number one, you don't make or lose money in the stock market until you complete the transaction, which means you sell. That's important. Because a lot of us, myself included, when the stock market was going like this, I was telling everybody and their brother, oh, I made this, I made that. And I didn't make squat. I didn't sell. My portfolio was up that or up this, but I didn't make squat. You don't make money in the stock market until you sell. That said, it works in reverse as well. If you're looking at the market the last couple of days, you could say, I lost X or I lost Y, but you really don't have that until you sell. Now, be clear, I'm not saying buy or sell. I'm not in the stock market. That's not my thing. But what I want you to realize is when the market was going up like this and you were telling everybody you know that you made 20 grand, 100 grand, 500 grand in the market, and all that happened is stocks went up and your value went up, you didn't make it. I'm sorry. You make it when you sell. So that's number one. Number two, I believe stock trading, stock investing should never be fun or stressful. What do I mean by that? A lot of day traders, a lot of new investors got into stock trading here in the last 90 to 180 days because their friends were having fun. It was a form of entertainment. It was a way to be social, and it was a way to be on the couch and feel productive. I don't think investing should be fun, right? It shouldn't be a form of entertainment. Going to the casino and throwing some money in blackjack or poker or roulette, that's wasteful. And if you're seeing stock trading like casino, I'm not sure that's how I want to do. I think investing is practical. I think it should be done. I think it's a plan. I just don't think it should be called fun. The other thing is I don't think it should be stressful. If you are investing and yet you are losing sleep, there's a problem. And I say that from firsthand experience. This is what got me out, right? As I shared yesterday, the day before, losing all this money after winning all this money. And then I just, for whatever reason, felt I had to be constantly invested. So I moved my money here and then lost, and moved my money there and lost. And I should have just gone to cash. So I don't think investing should be categorized as fun. If you are, it's probably doing it wrong. And I don't think it should be stressful. If you are, in my opinion, you might be doing it wrong. That's number two. Here's a big one for folks. Momentum works in both directions. Those big 6 tech stocks have seen crazy momentum. Tesla has seen crazy momentum. Peloton, crazy momentum. On and on and on and on. Momentum works in both directions. And what we may be suffering through for the next 10 days is negative momentum. What's going to happen and may be happening today is the weak hands get flushed. They can't stomach the losses. It's momentum's a fickle mistress. It goes up and down. And if you're in the wrong way, you can get run over, and I have the scars to prove it. Number 4, never confuse day trading with investing. This might be a personal quirk of mine because I had a tax return that showed 6 figures in profit one year, and then it was all gone, and then some. I called myself an investor. I wasn't an investor. I was a day trader. They're not synonyms. They're not the same thing. I'm not saying one is better or the other. I'm just saying don't confuse them. If you're a day trader, own it. If you're an investor, own it. Don't do what I did and confuse day trading and investing, because they are not the same thing. Just not the same thing. And of course, number 5, this one again, I can only share my experience, but hot companies can be frauds. My experience bouncing from an Enron catastrophe to a WorldCom catastrophe happens to be fraud from 20 years ago, and hopefully it's better now, but you never know. When the tide goes out, as Warren Buffett is very common saying, we will find out who is swimming naked. And when the tide went out 20 years ago, boom, Enron, fraud. Boom, WorldCom, fraud. We may have some zombie companies today that are living on government subsidies that are just bankrupt. Too much debt. You might be invested in some of these. Who knows? They'll come out of left field. No one will see it coming. How many people... I mean, there was a book written about Enron where they had the smartest people in the world, and like a month later they were busted. WorldCom, was it Bernie Ebbers, I think? Genius in communication, doing all these great things, buying all these companies. Fraud. Who knows? Wirecard in Europe, Germany? I don't remember where it was. I think it's Germany. Fraud. What was that coffee company in China? Fraud. It'll happen. Somebody, somewhere. Never know when it's coming. Again, this is a personal scar. I got burned twice back to back. I'll never forget it. And then the last thing, just kind of a bonus for you, is when you are investing in stocks, you have to remember you have 3 levels of risk. You have company risk, sector risk, market risk. You have to appreciate all those 3. And that's what really has caused me not to go into the stock market. I don't have the appetite nor the interest in managing all of those levels. And that means I have missed a 50% run in the S&P. It's okay. I know what I know. I've learned my market. I can sit on cash when there's no deals. So in the end, I realized the last couple of days in the stock market have been rough. We're, getting close to the 10% kind of correction. Again, the 5 things plus the bonus. You don't make or lose money until you complete the transaction, basically meaning sell. Trading and investing, I don't think should be called fun or stressful. I don't think I think if you're doing either, check yourself. 3, momentum works in both directions. 4, day trading, not investing. They're not the same thing. They're both okay, but don't confuse them. I did, and I was an idiot. Hot companies can be frauds. They are often found out in crashes, and I think it's very likely that we have some zombie companies today that have too much debt that won't exist in the future. We'll see. Could be wrong. And then lastly, company, sector, market risk. Enjoy your day. I hope the market turns around for you. I have nothing win or lose in it, so I hope it turns around. Enjoy your long weekend. Bye.